Welcome, listener, to this custom deep dive. You've shared some really interesting materials on Dutch Bros, mostly focused around their Q1 2025 earnings.
Right. We've got news summaries, analyst takes, the actual earnings call transcript, and their slides. So quite a bit to dig into.
Yeah, exactly. Our mission really is to unpack all this, figure out what's behind their performance, what the key takeaways are.
Let's do it. There's definitely some impressive stuff in here.
Okay, so starting right at the top, Q1 financials. Revenue looked, well, pretty huge, $355.2 million.
Yeah, and that's up, what, 29.1% year over year, which is a really strong number.
And importantly, I saw that beat estimates quite handily.
It did. That kind of beat often suggests, the company's hitting its stride maybe even better than the market expected.
And the good news kind of kept rolling down the income statement, didn't it? EPS, earnings per share.
Also beat. Came in at $2.13, whereas I think the expectation was closer to $1.10.
Okay. And net income itself.
Slight nice jump too. $22.5 million. Compare that to $16.2 million this time last year. So real growth there.
So it wasn't just revenue growth, the profitability seems solid too. Anything specific on that, like adjusted EBITDA?
Adjusted EBITDA also saw a healthy increase, up 19.7% to $62.9 million. It shows they're managing costs, operating efficiently even as they grow that top line.
Okay, strong headline numbers. But let's get into the why. What's actually driving this? Expansion is obvious, but it's more than just opening new drive-thrus, right?
Oh, for sure. I mean, expansion helps, but you got to look at same shop sales. That tells you how the existing stores are doing.
Yeah.
And system-wide, those were up 4.7%.
4.7%. Okay, that's solid in this environment. But I noticed the company-operated stores did even better.
Yeah, that's interesting. Company-operated same shop sales jumped 6.9%.
Any thoughts on why their own stores are outpacing the system average?
Well, it likely comes down to control, right? They can implement initiatives, training, marketing, maybe more consistently or quickly in the stores they run directly. It suggests their core playbook is really working well when they execute it themselves.
And it wasn't just higher prices, right? They were actually getting more people through the line.
Exactly. Transaction growth was key. System-wide, up 1.3%, but again, company-operated was stronger, up 3.7%. So yeah, definitely bringing in more customers, not just relying on bigger orders.
And the CEO, Christine Barone, she mentioned some specific things driving those transactions on the earnings call.
She did. She highlighted a few key areas, like category-wide innovation, keeping the menu fresh. Also, increased paid advertising seems to be paying off.
Advertising, okay. And the loyalty program, Dutch Rewards.
Big time. That came up a lot. Growing that program, using it to engage customers, seems absolutely central to driving that repeat business and those transaction numbers. It's like a three-pronged attack. New stuff, ads, and loyalty.
Makes sense. Let's talk about that expansion piece more directly. 30 new shops just in Q1. That's a lot.
It is. It keeps them on a pretty aggressive path. They're now over 1,000 locations, 1,012 across 18 states by the end of March.
And most of those new ones were company-operated.
Yep, 25 out of the 30. Which again kind of reinforces that strategy of controlling the experience, especially as they enter or build density in markets.
And they stuck by that a pretty audacious goal for 2029, right? The 2029 shops by 2029.
They did, yeah. 2,029 shops by the end of 2029. That requires, consistent mid-teens % growth in new shops every year. It's ambitious.
So how are they making sure that growth is like smart growth, not just putting up stores anywhere?
Well, they talked quite a bit about the investments behind that growth. Things like market planning tools, strengthening the real estate teams, using data analytics more effectively for site selection. It's about trying to make sure each new shop performs well from day one.
And they brought in a new face to lead that charge, right?
Yeah.
A chief development officer.
Correct. Brian Choi. His background, especially from KFC during a high growth period, seems like a really good fit for what Dutch Bros is trying to achieve right now.
Yeah.
Lots of relevant experience there.
Okay, so expansion is one pillar. But what about squeezing more out of the shops they already have? You mentioned initiative, like order ahead.
Yeah, order ahead seems to be really catching on. It was about 11% of their transaction mix in Q1.
11%, wow.
Yeah, and they noted it's particularly popular in the mornings, when people are rushing, and also in newer markets where maybe people are trying it out.
And does it actually help speed things up?
Seems like it. They mentioned using the walk-up window for those orders, which likely takes pressure off the main drive-through lane. So, yeah, it helps with throughput.
And throughput itself, just general speed of service, was another focus area.
They're looking closely at operations during peak times, optimizing where staff are positioned, identifying bottlenecks. the usual stuff, but really focusing on it.
Are they seeing results from that?
They said early pilot programs are looking promising. So likely more to come there as they figure out what works best and roll it out.
Okay. And then there's the food. They've been testing that for a while. Any updates?
Yeah, the pilot's expanded. It's now in 32 shops, offering 8 items. And importantly, that includes hot food options now.
Ooh, hot food. That could be a big step. What's the goal there?
Incrementality, really.
Yeah.
Drive more visits, especially maybe boosting that morning business, but crucially, doing it without gumming up the works or making things too complex for the baristas.
Right. Got to keep that speed. When might we see food more widely?
They're targeting a broader rollout sometime in 2026. So they're still testing, learning, making sure they get it right operationally.
Okay. And back to the Dutch Rewards program, you said it was huge. What were the numbers again?
Incredible, really. About 72% of all system transactions in Q1 came from rewards members.
72%. That's
Yeah.
massive loyalty.
It really is. And think about the data that gives them. They can personalize offers, run targeted promotions, get direct feedback. It's a really powerful tool for them.
And keeping things fresh clearly matters too. The menu innovation piece.
Definitely. They mentioned specific examples like the sweet cereal sip, the spring green tea trio,
Yep.
things like that, plus their merch drops, create buzz and get people coming back. It's not just about the coffee.
It sounds like that paid advertising push is underpinning a lot of this too.
Yeah, they're keeping the pedal down on that, both in new markets to build awareness and even in mature markets to stay top of mind. And they said it's having a positive impact. Seems like money well spent for them right now.
Okay, so pulling it together on the financial health side, margins holding up okay despite all this activity and cost pressures?
Yeah, for the company shops, gross profit margin was 21.9% in Q1, same as last year, basically.
Yeah.
Which is pretty good. They generated $71.5 million in gross profit from those stores.
And what about headwinds, like coffee prices going up or potential tariffs? Are they worried?
They acknowledged those pressures, yeah. But the commentary was, pretty confident. They believe they can manage within their current guidance. And crucially, they mentioned their coffee costs for the rest of 2025 are largely locked in already.
Ah, okay, that provides some certainty. So what is the guidance for the full year 2025?
They're aiming for total revenues between $1.555 billion and $1.575 billion.
Okay.
System same-shop sales growth projected between 2% and 4%. And adjusted EBITDA expected to land between $265 million and $275 million.
And given the strong Q1, are they leaning any particular way within those ranges?
Yeah, they actually signaled they're trending towards the top half of those ranges,
Mm.
which is, generally a positive sign.
And new shops for the full year?
At least 160 new system openings planned for 2025.
Wow. And the capital needed for that?
CapEx projection is between $240 million and $260 million, mostly earmarked for building those new shops. So significant investment continues.
Okay, so the company feels good, the numbers look good. What are analysts saying? What's the view from Wall Street?
Generally positive, on average. The average price target from analysts suggests some potential upside from current levels. And the overall recommendation tends to be like an outperform or buy.
I saw a mention of maybe some valuation concerns.
Right. It's not unanimous. There was one analysis highlighted using something called a GF value estimate, which basically suggested that despite the strong growth, the stock price might actually be, a bit ahead of itself, potentially overvalued.
So strong performance, but maybe the market has already priced in a lot of that future growth. That's something for listeners to consider.
Exactly. It's that classic tension between great company performance and current stock valuation. Definitely something to weigh.
Okay, looking even further out, what's the big long-term dream for Dutch Bros beyond 2029?
Well, that 7,000 shop number gets thrown around as a long-term target. So massive potential scale in their view.
7,000. Wow.
Yeah. And then also started to talk just a little about maybe entering the CPG channel, consumer packaged goods, like selling Dutch Bros products in grocery stores.
Interesting. How would they do that?
Probably through licensing deals is what was mentioned. It seems more like a long-term brand-building idea at this stage, not an immediate focus.
But throughout all this growth talk, they still emphasize their culture, right? The baristas, the experience.
Absolutely. They consistently circle back to that unique drive-through experience, the community connection, the energy of their employees. They see that as their core differentiator, the thing that allows them to compete and grow.
So wrapping this all up, taking this deep dive, it really paints a picture of a company firing on, well, quite a few cylinders.
Yeah, I think so. They're clearly exceeding expectations financially. They've got multiple levers they're pulling, For growth, new stores, sure, but also tech like order ahead, menu innovation, that powerful loyalty program.
And they seem to be managing the tricky balancing act of rapid expansion while also trying to boost sales in existing stores and navigate costs.
Right. Doing that successfully, especially with the kind of same-store sales and transaction growth they showed in Q1, is pretty compelling.
Although that valuation question mark from some analysts is definitely food for thought.
hmm It highlights that even with a great story, you always need to consider the price you're paying as an investor.
Well, hopefully this detailed look has been valuable for you, listener, cutting through the noise to see what's really driving Dutch Bros. What stood out most to you from all this? Does it spark more questions about their path forward?
Yeah, and if you do want even more detail, remember you can always check out their investor relations site for the full earnings release, the slides, everything we talked about.